In this video, we'll go through how crypto taxes work in Canada, what the CRA may expect from crypto users, what can be taxable, and how to prepare your crypto tax report. This video is for educational purposes only. Crypto tax depends on your personal situation, your province, your activity, and how your transactions were made. If you are unsure, speak with a qualified tax professional. The goal of this guide is to give you a practical overview. We'll cover taxable crypto events, the difference between capital gains and business income, adjusted cost base, record keeping, reporting basics, and how to prepare a crypto tax report. Canada's personal tax year usually runs from January 1st to December 31st. For most individuals, the tax return deadline is usually April 30th. Self-employed individuals may have until June 15th to file, but any balance owing is generally still due by April 30th. In Canada, crypto is generally treated as a commodity for tax purposes. Depending on your activity, your result may be treated as a capital gain or loss, or as business income or loss. This distinction is very important. If you are investing and occasionally disposing of crypto, the result may be treated as capital. But if your activity looks commercial, frequent, organized, or profit-focused, the CRA may treat it as business income. The facts matter. The classification matters because capital gains and business income are reported differently. With capital gains, only the taxable portion is included in income. With business income, the business profit may be fully taxable. Selling crypto for Canadian dollars is a common taxable event. You compare what you received with your adjusted cost base. Depending on your activity, the result may be a capital gain or loss, or business income. A common mistake is thinking that tax only matters when you cash out to Canadian dollars. But trading one crypto for another can also be a disposition. You need the Canadian dollar value at the time of the trade. If you use crypto to buy goods or services, that can also create a tax event. From a tax perspective, spending crypto can be similar to disposing of the crypto at its fair market value. Gifting crypto can also matter for tax. Even if you did not receive cash, you may still need to determine the fair market value in Canadian dollars and compare it with your adjusted cost base. Buying crypto with Canadian dollars is usually not taxable by itself. Holding crypto is also not taxable by itself, but you still need records because your purchase price affects your adjusted cost base when you later dispose of the asset. Moving crypto between wallets you control is usually not a taxable event by itself, but it must be tracked correctly. If transfers are missing or unmatched, software may treat them as deposits, withdrawals, or disposals incorrectly. Canada uses adjusted cost base, often called ACB. This is your cost for tax purposes. For identical crypto assets, your cost is generally tracked using an average cost approach, not a simple first-in, first-out method. The basic formula is proceeds of disposition minus adjusted cost base. That gives you your capital gain or capital loss. For Canadian tax reporting, the values should be calculated in Canadian dollars. For capital gains, Canada generally includes only a taxable portion of the gain in income. The inclusion rate can change, so always check the current CRA rules for the tax year you are filing. Canada has a superficial loss rule. If you sell crypto at a loss and buy back the same or identical property within the rule's time window, the loss may be denied. This is important for tax loss harvesting. Mining can be more complicated. If your mining activity is commercial, organized, and profit-focused, it may be treated as business income. The scale, intention, equipment, and regularity of the activity all matter. If you receive new crypto from staking, referral programs, learn-to-earn campaigns, or DeFi rewards, this may create income when received. Later, if you sell or trade those tokens, you may also have a gain or loss. Airdrops and hard forks can be tricky. The tax result can depend on how you received the asset, whether you gave anything in return, whether there was a fair market value, and what happened when you later disposed of it. DeFi and NFTs can create different types of tax events. Swaps, liquidity pool transactions, rewards, NFT sales, NFT creation, and NFT gifts may all need review. The tax treatment depends on the actual transaction. Fees can affect your crypto tax calculations. Trading fees, network fees, withdrawal fees, and gas fees should be tracked. Depending on the transaction, fees may affect proceeds, adjusted cost base, or the gain or loss calculation. Crypto losses can matter, but not every bad outcome is automatically deductible. Lost crypto, stolen crypto, scams, and rug pulls can be complex. Documentation is important, and professional advice may be needed. Good records are essential. You should keep dates and times, asset names, amounts, Canadian dollar fair market values, fees, wallet addresses, exchange history, and transaction IDs. Missing data can make your report inaccurate. If your crypto activity is treated as capital, crypto disposals may be reported on Schedule 3 of your T1 return. If your activity is treated as business income, it is reported differently. The correct classification is important. A practical workflow looks like this. Collect your exchange data, add wallet activity, match transfers, review taxable events, calculate adjusted cost base, and generate the reports needed for filing or for your accountant. CryptoTaxBridge helps you turn exchange and wallet data into a clearer crypto tax report. You can import transactions, review your activity, check gains and losses, and prepare PDF and CSV reports. Before filing, check that all exchanges and wallets are included, transfers are matched, Canadian dollar values are checked, fees are included, income is reviewed, and your reports are exported. If you want to prepare your Canada crypto tax report, start with CryptoTaxBridge. Import your transactions, review your activity, and generate your crypto tax reports. The link is in the description.